For that, Vaibhav Sanghavi, CEO at Ask Hedge Solutions, is now joining in. Vaibhav, we've largely been range-bound now for a long time. We fell in April, we managed to recover, we declined a bit. Again, markets are trying to make a bit of a comeback, but broadly, we've been in a range. What has been your approach to markets, and how's your portfolio shaping up right now?
So, Rima, I think from a portfolio standpoint, reflecting the current market conditions, which is, as you rightly mentioned, pretty much range bound. I think we are, running a very tight portfolio in that perspective, from a long short perspective. Having said that, I think when you look at the markets, our view is currently that markets will continue to be range bound till we see a decisive movement of FPI starting to invest back into, India. At this point in time, we are seeing rebalancing from an emerging market standpoint towards China, Korea, Taiwan. So we'll wait when it kind of stabilizes, and probably a couple of rate cuts from Fed should do the trick in that sense.
So when you say it's a tight portfolio, what exactly do you mean?
I think from a net exposure perspective, I think we would continue to, maintain our net positions, which are, very narrow in that sense, right? Having said that, the GST announcements, which have kind of come about, has made us, slightly more optimist, from a portfolio standpoint, wherein we may probably increase some amount of our exposure in a limited way. But on an overall basis, we do think that once we break out of the range on a convincing basis is when, secularly our exposures will likely go up.
Vaibhav, hi, good to have you on. Last time we spoke, we discussed a couple of themes and sectors, and you had liked financials even back then. But just run us through the biggest overweights right now for you in the portfolio, and within financials, what part of it? Is it tier one banks, private, PSU? Is it non-banks? What do you like?
So, Sylvia, I think in our conversations earlier as well, we did mention very, vocally in that sense that consumption is a theme we like from a 12 to 24 months perspective. We continue with that view. In addition to that, I think when you mentioned about financials, we like more from a financial services. And when we talk about financial services, it's like an AMC companies, who kind of, are looking at good business model. Of course, they have kind of rallied quite a bit. So probably at some correction, we will look at that again. But from a banking perspective, we do think that the two top private banks or few top private banks are some, where you can probably look to have an exposure. Having said that, we'll wait for any indication in terms of the rate cuts, which may probably happen going forward. And if the rate cuts kind of happen, then you may see one odd quarter more of pain in terms of the net interest margins. And that is where we would probably say that, once that is out, is when you go pretty much secularly bullish in terms of the banks at that point in time.
Vaibhav, what is the sense you get from, the UHNI money that you manage and, that client, that category of investors that you speak with? Is there a lot of money that's waiting to come in? I mean, waiting for some sort of evidence of maybe a turnaround in earnings? Or do you think largely people are deployed and therefore the market is squarely resting on domestic mutual fund flows now?
Of course, Sophie, I think in all our conversations, right, over the past 2 to 3 years, the amount of exposures from a portfolio standpoint towards equities as an asset class has definitely seen some good size uptick. So which means that they are kind of invested, fairly from a portfolio standpoint. And when you're looking from an overall portfolio, surely their financial advisors would be advising from an overall asset allocation, wherein they would definitely need to have some amount of exposure to your fixed income or any of those kind of hybrid instruments as well. So all in all, while the overall exposure from portfolio standpoint has gone up in terms of an equity, the SIPs, to be very honest, from a larger retail kind of universe is still kind of helping. So HNIs, I think, they're fairly exposed. It's just that their incremental money is coming from broader retail investors.
Thank you. We leave the conversation here. Thank you for joining in. Enjoy your weekend as well. Let's move on now.